Okay, so nobody just heard a word I said, right? I've been talking to myself. Welcome to the 100 Black Men Las Vegas Youth Economic Empowerment Club. I just said everybody's name, introduced everybody, and nobody heard me but me. But that's okay. Today from the 100 team, we have Mr. Clifton Hines and Mr. Kirkpatrick Richards. And also from the Wells Fargo team, we have Mr. Jane Pavick and Mr. Damian Freeze. I hope I said that right. Mr. Hines, I will turn it over to you.
Good morning, and once again, it's a pleasure to be here on behalf of the 100 Black with all of the credit to Wells Fargo for this opportunity to teach these young kids about banking and to give them a good opportunity to set their life up properly. I want to be a gracious host. So this morning, we have Mr. J. Patrick as our speaker.
No, actually, no, Jane is our Wells Fargo executive banking partner, and the speaker is Mr. Damian Freeze. They're both speaking. Everybody's speaking.
They're both speaking. Okay, so I'm going to introduce Ms. Jane Pavick, and she would bring up the other gentleman. Okay,
that's right.
Once again, Ms. Jane Pavick, the floor is yours. And once again, thank you guys for showing up. Thank you guys for being connected to this wonderful opportunity that was going to change your lives. Ms. Jane Pavick.
Thank you very much. Good morning, everybody. It's so good to see you all. You should give yourself a big pat on the back right off from the beginning, because you're here, right? Really appreciate you guys spending your Saturday morning with us. And I think that we've had some really good discussions over the last couple of weeks. So we're going to keep building on that. And I think we talked about how this is kind of building that foundation. So the first week, remember, we talked about earning power and how the banks help you move money through the economy. Last week, we talked about making a plan to save and spend your money, which is also called a budget. So I just wanted to pause and see if any of you guys had any questions. Were you able to talk to your parents, your guardian, your family, your friends about what they do for their budgeting? You can take yourself off mute, or you can put it in the chat. Damian's going to be reading the chat if you want to use that too. Were there any questions that you guys had? Okay, I'm going to take that as a no. So before I let Damian reintroduce himself, remember Damian came and visited us the first lesson that we had. So this week we're going to talk really in depth about checking and savings account. And I think that you all reviewed the lesson before today, but we're still going to go through it again because it's a lot of information. And this might be new information to you all. This might be information you already know, but definitely ask questions, put it in the chat, use your emoji reactions if you want. If something sounds good to you, or if you have a question there, you can take yourself off mute. So I am going to turn it over to Damian. Before I do that, I will also say that we've got a lot of lessons, so we're going to group them in, play 3 of them at a time, and then discuss them, because there's a lot of lessons and they all kind of flow together, and you guys may have already experienced that. But Damian, do you want to just remind everybody where you're at and what your job is with Wells Fargo before we start playing the first lesson?
Yes, absolutely. Good morning, Jane. Good morning, Rhonda, Mr. Hines, Mr. Richards, and everybody joining us today. Definitely the highlight of my week for sure. Like being in front of you guys and teaching you guys just the stuff that I go through every day on a daily basis. So my name is Damian Frias, and I'm a branch manager at the Henderson location off of St. Rose and Eastern. So I've been in my role for, oh man, about 4.5 years. In total, I've been with Wells Fargo for 11 years by way of California, by way of Washington, D.C., and now by way of Nevada. So I'm happy to be here in front of you guys. And like Jane said, anything you guys have, any questions, definitely plug them into the chat. I know Jane can't see that, but I can. So if I get too fast for you guys or I get ahead of you guys, we'll slow down because I want to make sure we answer those questions before we move on to any of the lessons, because that's what you guys are listening to out there with friends and family. And I want to be able to spotlight some of that for you guys, okay?
Okay, you ready to go?
I'm
Damian?
ready. Yep.
Okay, let me share my screen. And share my sound. Okay, you guys can see the lesson, the introduction page? Give me
Yes.
a quick nod. Okay, great. Here we go.
Where do you keep your money? In your wallet? Your locker? In a secret spot? Have you ever thought about maybe putting your money in a safer place? And what if you could get paid to keep your money where it's safe? Well, you can. At a bank. In a savings account. Let's check it out. In You and Your Money, we saw how money comes to banks from many sources. The Treasury, businesses, and people. People use banks to keep their money safe, but they also use banks to earn even more money. They use savings accounts, which banks set up for you so you can save your money. So how do you make money through a bank? The good news is that many banks pay you to keep your money in the bank. That's right. They pay you what's called interest. In other words, you make money on your money. You're paid a percentage of the amount that's in your account. But banks also turn around and lend your money out in the form of loans. Remember, banks make money on your money when borrowers repay their loans with interest. So interest works either in your favor if you're saving or against you if you're borrowing. The amount of interest you can earn varies from bank to bank and depends both on the kind of savings account you have and also on how much money is in your account.
All right, one more.
Perfect.
Are you saving money for anything special? I'm saving for my own computer. It's going to take some serious saving to get there, but I'm saving. The money keeps adding up. Banks offer several types of savings accounts. My savings are in a regular savings account at the bank. I earn interest that's paid every month. Another safe savings account is called a certificate of deposit, or a CD. Your money must stay in the account for a fixed period of time, also called a term. But in return, you'll get a higher interest rate than you would with a regular savings account. And finally, there are money market accounts. They're really savings accounts that allow you to write a limited number of checks. You'll get to know about checking accounts in a bit, but for now, just know that money market accounts generally have higher interest rates than regular savings accounts.
All right. I think you can go ahead and stop it there for right now, Jane.
Yep.
So if you guys haven't already known, we are going to be talking about savings accounts, and we are going to be getting to checking accounts. So I definitely want to go over some of the basics that we have in our hands-on banking, just some of the tips, some of the rules, and then we'll get into some of your questions because you guys might have some questions on this, because I know you guys like to save your money and calculate how much the bank can, contribute to that and go from there. Okay. So savings means putting aside for your future use. So banks and other financial institutions offer incentives for people to make their money in a savings account. These incentives are referred to as interest. So like they mentioned in the video, interest can work in your favor and then it can work against you. And we talked about that briefly when I was on last time. The savings that you earn in your your savings account It's considered annual percentage yield, and definitely any interest you get from a savings account, it's going to benefit you because that's going to just be extra money in your pocket. Okay, so the amount of interest people will earn depends on a number of factors, including the types of savings accounts they have, which financial institution has that account, and how long they keep their money in the account. Okay, banks pay you interest on the money put into the savings accounts because the bank is able to use the money to make loans to other customers. Okay, so in fact, banks pay their customers for the privilege of using their money. Okay, any questions with what I just went over? No questions?
Well, I just want to jump in with a quick question also then
Yeah.
for the group. Just either in the chat or raising hands or so on, as we're talking about saving, hypothetical question or just survey really, what's better, to save or to borrow? And I kind of want to know what our folks are thinking out there. Either raising your hands or just in the chat, just as a survey, if everyone could kind of just let us know that. And I think that's a good question because as we progress, you're gonna know for yourselves what's better. And with that, I'll turn it back over to you. But hypothetical, just really quickly in the chat, if you could just kind of throw some answers out, and we can keep going.
That is an awesome ad, Mr. Richards. So once again, is it better to save or to borrow? Do you want to save and hypothetically use your own money, or do you want to use the bank's money and go from there? So keep that to yourself, and then we can revisit it a little later and chat about that. I see we're getting a lot of saves out there. Awesome. So we'll keep that in mind because I believe there is going to be some hands-on banking for credit and stuff like that right later, Jane. So
yeah, next week is when we're going to talk about credit and how borrowing money and how when you make a promise to borrow money and then pay it back, how that impacts your credit score and what interest you get charged for borrowing money from the bank. So that's next week, definitely.
Absolutely. So thank you for that ad. Appreciate that. So they briefly talked about the types of savings accounts, right? You guys are all mentioning you guys would want to save. So regular savings accounts, the interest is paid monthly. Okay. The bank may require a minimum deposit. So this means the amount of money you put into the account each time, or just, how you open the account up with that initial deposit. There may be limits on the number of deposits and withdrawals you can make. So we'll talk a little bit about that. And some banks charge fees, right? Everybody charges fees. Banks a business, so they're in the business of making money. So fees is a primary source of where they get a lot of their money in addition to that bad form of interest that they were talking about. Okay.
So Damien?
Yes.
I have a question because I don't work at a branch like Damien does. Does Wells Fargo require a minimum amount? Sorry, it's Saturday. Is there a minimum deposit that people have to bring when they open a savings account?
Yeah. So, any bank, they're really hounded by just certain regulations and whatnot. And for our bank primarily, anytime you're opening up an account, you do have to have an opening deposit. So for all our accounts, they've brought it down significantly, and it's $25 to start that account. And that can be in a form of cash, check. If there's an existing account, you can transfer that right then and there with the banker at their desk. But yeah, it's $25. So if you're opening up a checking account, $25. If you open up a savings account, it's another $25.
Okay.
Hey, Damien.
Yes, sir.
I didn't meet you in the beginning. My name is Daryl Rayford. I'm the CFO of the 100 Black Men, and I apologize for being late.
Oh, no worries.
But the $25 minimum, I know some banks, and I don't know if Wells Fargo offers this. If you're a student, it's free. Do they offer that?
Mr. Rayford, you're spot on. So a lot of our accounts, Oh man, they switched it before the age of 18. It was free. So you actually have a free account as long as you follow the requirements. And I believe the only requirement that we have right now is signing up for online banking. So as long as, you know, a parent or guardian co-signs with you, which we'll get into in just a little bit, you sign on, you apply for your online banking, and that'll waive your fees going forward. Yeah, you still have to have your opening deposit, unfortunately, that $25. But like I said, we just need that for the day. You can keep it in there for the year, however long you want. But that primarily just activates the account, so to speak. And then once the banker opens up everything else, you know, if they want a debit card or whatever the case is, they'll have that account free through the age of 18. They've changed the requirement now. So if you're going to be a student after 18, you'll be able to convert the account and get that waived until you're 25. So really, really cool stuff coming down the pipe. But yeah, absolutely. We want to make sure you guys avoid any fees at all cost.
Thank you very much.
Yeah, and one more question. So the fees, Damien, part of that pays, because Wells Fargo, it costs us money to maintain the account, right? To make sure you guys can access everything online. And if you want a paper statement, that costs us money too. But if you think about it, you're earning money. If you have a savings account, you're earning money too from Wells Fargo, because we're paying you because you're letting us use your money to help lend out to other customers. So in a way, it kind of balances out.
Absolutely. So Annie, you open an account tomorrow with a parent or guardian, that $25 is getting reallocated back out in the financial universe to lend out to other borrowers, not at our level, but obviously in the more of the finance side, to where they take care of a lot of that stuff. So yes, absolutely. And then the bank, like I said in the last slide, banks pay their customers for the privilege of using their money. So we know you can go anywhere and do your banking, but we see it as a privilege of using your money when you deposit it into our bank. So yeah, absolutely. Thanks, Jane. They also mentioned certificates of deposit. So that's kind of that was a tricky term for me to use, because I grew up with CDs, like a CD player, listening to music. And that's what I associated with, like, oh yeah, I know what a CD is. I didn't know they had that at a bank. So obviously, as I grew older and I knew exactly what it entailed, it's a way that your money must remain in the account for a fixed period of time, and that's called a term. So some of our CDs, they can go from 3 months, and they can go all the way up to 5 years. So the way that it worked, especially years back. The longer the term, the higher the interest, because the bank wanted you to keep that money so they can lend out obviously to other customers. But like Jane mentioned, they want to credit you, and they want to give you incentive for keeping that money there, which is interest of maybe 1%, 2%, 3%, or whatever it was at that particular time. Okay, I see we have a question from Genevieve. So it says, how much are we earning if we have $400 in our account? So that is a great question. So if you guys do have $400 in your account, it all depends on the interest that savings account is earning. Okay. And I'm going to be straight up with you guys. Okay. So in this day and age, the interest in that savings account is not, it's not as lucrative as it once was, when I was a kid or when your parents were growing up, because back then you had interest rates at 1, 2, 3, all the way up to 10%, depending on the product. Now, don't laugh. Okay. I think the last savings account rate was at a 0.05%. So if you do the math, it's not a whole lot, right? So to Genevieve's question, right? So you have $400, and you're going to times that by I believe it's 0.005, I want to say. Okay. And then since we compound that monthly, you're going to be dividing that by 12. So divide that by 12. So you're looking at, you know, a cent, maybe 2 cents, if that, every month. Okay. So like I said, it's not entirely like it was way back when we were growing up, but a lot has changed in the economy, you know, with inflation and everything like that. So yeah, so that $400, that's basically what you're looking at. Okay.
Yeah.
Now, yeah.
And one way you can look at it though is the longer you keep it in there, the more interest you'll earn.
Yes.
And also it's safer than being someplace like in your mattress or in your drawer. It's in the bank. You know that like a fire, like if you had your money saved in a drawer and heaven forbid something terrible happens to your house, you would just lose that money. So it's safe. And the longer you leave it in there, you'll earn more interest. And this is just the beginning of your financial journey. So this is building that foundation. And as you start working, or you just keep the money in there and earning, it's going to continue to grow and grow and grow. So and also the economy changes, so interest rates change periodically. But that's why they're, you know, when we were growing up, maybe it was a little bit higher, but right now, just because of what's going on in the economy, that's where Wells Fargo gets the interest rates from, is what the federal government through the Federal Reserve gives us the interest rate that we, that's a whole complicated another lesson that I don't know if we want to get into right now.
Hey, Jane. Hey, Jane. I've got my money still in my fanny pack. Is that okay? I'm just joking, kids. I'm just joking.
Oh my goodness.
But I wanted to say that it's important to have that base.
Yeah.
No matter what the interest rate, building that base of saving is going to prepare and propel you into anything else that you're doing.
Yeah.
So it's very important to have that base, because once you have that base, you're set up for what we also have, which is emergency funds.
Yeah.
Which is a big deal. Typically, you should have 3 to 6 months of emergency money set aside. That should be a base or built in within your savings. So there's nothing wrong with having that cash. And yes, it's not fancy. It's not going to blow your mind, the amount of interest that you're going to make right now.
Yeah.
But the more that it compounds, the more that you have that base, you're setting yourself up to be able to go out and potentially do some other things that we'll talk about as we go along. But having that base is very important. And I do see another question in the chat. What happens to the bank? Or I'm not reading that right. Let me see.
Yeah.
Here. What if something happens to the bank? So I'll turn it back over to you, Tim.
Yeah, absolutely. And guys and gals on the line right now, this is important information that we're excited to give to you guys. So please, please, please listen, take notes, do what you can. We got some great experience on this channel. And I want you guys to be able to learn from Mr. Richards and Mr. Rayford, because that base alone, when you have the good money skills to save, like I said, opens the gate to a lot of other avenues. Okay. And those avenues, consist of, investing and, your retirement and 401k and things of that nature, but you cannot do that stuff unless you have a solid base like Mr. Richards was mentioning. Okay. Let's answer that question. What if something happens to the bank? So I think we already touched upon this, and, Mr. Rayford joked about having his money in a fanny pack and, underneath a mattress. And believe it or not, I have customers that come in and say, hey, this money's cold because I have it in the freezer. I've had it in the freezer for however long. Very unsafe practices about savings. Okay. I highly encourage you to deposit your money into that bank because of that zero liability that the bank has, to make sure that your money is protected. Now, if something were to happen to the bank, we have what's called Federal Deposit Insurance Coverage, so FDIC coverage. and you're covered up to $250,000. Okay, so if you have up to $250,000 in your account per person per social, the bank, if something happens to it, if it goes down, whatever the case is, we will get you that money back. Probably not the next day, but I'm sure there's going to be some litigation and things of that nature that goes on that we get that money back for all our clients. It's just the insurance that the bank has to protect everyone. And that's why everyone uses a bank instead of keeping it in their pocket, because if there's a hole in your pocket and that money drops out, you can't get that money back. It's different once that's in the bank, and depending on, the circumstances and whatnot. So hopefully that answers your question. Is there any questions in addition to that, or does anyone else want to add to that? You got it, Angel. Okay. So we talked a little bit about CDs. So the more money that you deposit, the longer you keep into your account, the more interest you'll earn. You'll have to pay a penalty if you withdraw your money. So those are the difference. So we talk about the different savings accounts. You can have a savings in a liquid savings account, right? Or you can have it locked up in a certificate of deposit. Anytime you take out the money from a certificate of deposit, the bank's going to charge you a fee for that early withdrawal penalty. Okay, so I highly encourage you, when you do your research, if you go to wellsfargo.com and you kind of do your your own due diligence on what account that you want, you got to read that fine print. My bankers will also let you know that too when you come in. We'll let you know all those different fees and whatnot. But that's a huge cost, because a lot of times my customers will come in and they'll put their money in the CD and it's all it's in there for 2 years, but an emergency happens, right? And they need to pull that money out. So essentially, I mean, you're losing all that interest for that 2 years, and kind of have to start all over again. So you kind of have to do your math. Like Mr. Richard said, make sure you have that solid base in your savings account, that you're able to have that wiggle room. Okay. Looks like we have another question. So Nivea, why do you have to pay a penalty if it's your money? So that's a great question. And, like Miss Jane said, it's definitely something that the bank, it's a service that the bank provides to definitely keep your money safer. It's a little different. That savings and CD, they're two different products, but that savings account, for example, you can just come in, you're after school, you can come into the bank and withdraw that money just with your card at the ATM, or with a teller or a banker or whatever the case is. That CD, you actually have to set an appointment, sit down with the banker, and the banker will ask you questions based on, the reason, the needs of taking out that money. And you actually have to sign for liability reasons and whatnot to have that money come out of the account. So it's a service. When you're terminating that service early, that's where the fees and penalty come in. Almost kind of like, you write someone a bad check, and either that customer has an issue with their account, or you don't have enough money in your account to write that check. The bank charges you a fee for that. And we get that a lot, especially when someone thinks they have that money and a bill comes out, and then the process. So the bank has fees for a lot, but it's just how you're managing that money and being aware of those penalties for sure. Even if it's your money, we keep it safe for you, but we want to make sure that we're doing our due diligence as well too. Okay, Nivea, did I answer your question?
Or if I could add to that,
Yes.
With the savings account come in, you can take that out whenever you want to. With the CD, you're agreeing with the bank 12 months, 24 months, 5 years. You're saying to yourself, I don't need this money right now. And because you don't need it right now, the bank is going to say to you, great, let's make an agreement. Let's sign a contract together. We're going to shake hands together. And we're going to then say, I don't need this money for 12 months. Bank, sir or ma'am, I don't need this money right now for 12 months. You can use it for the 12 months And in return, you're going to pay me a higher interest rate on the CD in return for that time frame. Now, if something happens and you need the money, you're breaking the contract. And so if you already have a contract, you can't just come in and break a contract and not have a penalty. So that's the difference. A savings account, no real contract there, no binding contract. With a CD, you have a binding contract that you're allowing the bank to use the money for that set amount of time. And you're saying to yourself, once again, when you agreed, I didn't need the money. So that's why you always plan accordingly. That's why you have maybe a regular savings account, emergency savings account, CD, and so on, and you build on that. So once again, it just goes right back to the base. So with that, just wanted to throw that in. I'm going to stop talking.
And I'm going to add to that also, Kurt, and I'm going to add a story. You kids like stories? I love some stories, because a lot of times it's the story that we remember, not all the detail. My grandfather, who was born in like 1906, and I know you kids are like, oh my God, Mr. Rayford is ancient. Well, I'm the product of somebody ancient, but I'm proud of this story. My grandfather was the son of a former slave who was a preacher, who became a preacher. And my grandfather worked as an elevator operator in New York City. So you're talking about the 20s and the 30s and the 40s. How much do you think an elevator operator made back then? I don't know. Maybe $50 a month, maybe, I don't know. But what he did was he saved his money. As Mr. Kurt and Mr. Damien has said, he saved his money and bought a candy store in the Bronx. He bought a candy store in the Bronx. When he retired, he sold that candy store and profited $100,000. He profited $100,000. Now, this is before me, this is before Damien, this is before Miss Jane. In the 60s, banks were giving out about 10% interest on your money. So 10% on 100,000 is $10,000. My grandfather's rent was $700 a month. And I remember him always telling us kids that his rent is free, his rent is free, his rent is free, because he had his money working for him. So I just wanted to tell you that story because Mr. Damien and Mr. Kurt are telling you good, valuable stories. But in our society, we always want to touch the money. We need the money for Jordans. We need the money for a Lamborghini. We need the money for a $1 billion house. Save your money, spend it prudently, and if anything, get your money to work for you. And talk to people like Mr. Riches and Mr. Damien. That's it.
That is awesome. So two great points for Mr. Rayford and for Mr. Richards. They hit the nail on the heads. So like I'm saying, I love these seminars, these sessions, because you can get so much, especially from the experience that you have on the line. Leah, I see your question and it says, what is a bad check? Is it okay if we get to that in probably maybe 2 slides or so? Because I want to go over that a little bit more, but I will let you know what a bad check is and writing one and going from there. Is that okay? Because I want to make sure I get to everyone's question, okay? Ms. Jane, you can go ahead and play the next couple slides, and then we'll go from there, okay? Because I do want to get to the checks and all that good stuff.
Now see how easy it is to open a savings account. Just follow these 3 easy steps. Step 1, gather the things you'll need. it's best to have a parent or guardian to help you open an account. The parent or guardian can co-sign your account, which means that they'll sponsor you. As co-signers, they'll need to bring 2 forms of current photo ID. If they only have one piece of photo ID, their second ID may be a current major credit card or gas card. As for you, you'll probably need one piece of current ID with your picture on it, such as a student ID or a passport. You'll also need your social security number. ID requirements can vary from bank to bank, so be sure to ask your bank what forms of ID they require for you and your cosigner. Now comes step 2. Go online or visit the bank to help you choose an account. A regular savings account will probably be what you need, but you can ask the bank to suggest an account that's right for you. There may even be a special account just for teens. Be sure to find out how much money you'll need to open your account. Finally, you're ready for step 3. You've got your money, you've got your IDs, now go open your account. Simple, right?
Pretty simple, right, guys?
Now that you know how easy it is to open an account, I bet you want to know how to put money in and get money out.
Do you want me to keep playing it?
I think we can. Yeah.
Okay.
Yeah, I think we can.
So you can use it. Don't worry, banks make it easy. First, let's see how to add money, which is called making a deposit. At the bank, you start by filling out a deposit slip. A deposit slip is a form that tells the bank to put the money into your account. It's easy to fill out. You just put the date here and the money details here. If you're depositing cash, put the total amount in this block. If you're depositing checks, like, say, a birthday check, enter the check amounts here. Be sure to sign the back of each check. That's called endorsing a check. Now add everything up and enter the total on the subtotal line. If you want to get cash back from your deposit, put that amount here. You'll need to subtract it from the subtotal. Now put the total here, but don't sign the slip just yet. A bank teller has to watch you sign, and you'll have to show a picture ID to get cash back. Be sure to keep your receipt. You'll see why later. Now it's your turn to put $25 cash into your imaginary account. Just make up an account number for now. In real life, you'd give the completed deposit slip and cash to the teller, who would then give you a receipt and take care of the rest. That's all it takes to make a deposit.
Awesome. So why don't we go back to opening up a savings account? Could I ask if anyone already has a savings account opened up? If they can share maybe what that process was like at the bank, or what they remember, or if it was just last week. What did you guys take away from that experience? Anyone have an account out there, a savings account? Okay, I don't see anything, so we'll assume that everyone does not. So you guys will get plenty of information right now, especially when you guys have your parent or guardian take you to the bank. Now, it doesn't necessarily have to be Wells Fargo. Obviously, we'd love it if you did, but you might have a closer financial institution near your school, work, or your home. But it's important to keep in mind. Oh, Leah, you do. Awesome. Do you mind sharing how that experience went?
That's Nasir, actually. Nasir, tell us how your experience was.
Okay.
My mom made it for me.
Nice. Did she give you any words of wisdom this year?
Oh, well, she's in a meeting right now, but
Oh,
I didn't know I had an account till like 2 years after my mom had it for me.
awesome. So your mom knew very wisely to open that account, and anything extra she had, or maybe she put a monthly, deposit in your account. That was important for you growing up, right? So that's great. That's a great foundation. So let's talk a little bit about what Nasir's mother, or what you guys are going to expect when you guys go into the bank. Okay. So it's important Middle school students can open their own savings account at a bank or another financial institution. A parent or guardian must accompany the student, and the student must know their social security number and some money to deposit. If you guys don't know your social security number, it's okay, at least for Wells Fargo, but make sure you guys bring in your social security card, okay? It's a little card that has, numbers on it, a place for you to sign, but you guys don't have to sign in until you're 18, at least by banking standards, okay? The parent or guardian will co-sign the student's account. All that means is that that parent or guardian is going to be on the account with you as a signer. So they're going to have equal responsibility. Whether you handle the account great or you handle the account poorly, they are going to be on that account with you to help you manage, negotiate, and help with your savings and budgeting and things like that, okay? They will be sharing responsibility for the account. And then here are just some guidelines for you guys when you guys do go into the bank. One, and it's almost kind of like I do have to mention this. It's very important that you take the initiative, especially nowadays with COVID and the pandemic and whether you can wear a mask or not wear a mask. It's very important to reach out to your local bank and set an appointment. We're having to turn away a lot of customers because we don't require an appointment at Wells Fargo, but with so much with our staffing, it's dwindled by maybe 60-70%, and the 6 bankers that I had are down to 1, 2 per day. So they can get pretty busy, and good responsible just stewardship of doing business. You can set an appointment online, or I'll give you my info. You can give us a call and my bankers can set an appointment for you. But it's very important that takes care, because a lot of times I get a mom, a dad, a guardian come in with their high schooler or their middle schooler, and they're so happy to open an account and they're ready, they got their deposit. But unfortunately, guess what happens? We have lines out the door. We have a lobby full of customers that are wanting to see a banker. Maybe they had fraud, maybe had this. So I highly recommend setting an appointment at your local financial institution, because it will help them out prepare for your appointment when you come in, okay? In addition to that, your parent or guardian will have to bring in 2 forms of ID, okay? I repeat, 2 forms of ID. The first being a driver's license or state ID. The other could be a passport, U.S. military ID, an alien registration card, or a consular card. If they don't have, maybe another form of ID apart from their driver's license or state ID, they can always bring in like a gas credit card, or like another card from another bank, a debit card. We just have to have 2 forms of ID with expiration dates on them. Okay. I hope I'm not losing anybody. Okay.
Could they bring in a statement from like their cable bill or their water bill, something like that?
Yeah, perfect, Jane. I was just about to get to that. So apart from the 2 forms of ID that we'll have to establish for that adult that's going to be on the account, Wells Fargo, and in fine print, I like it at the bottom of this hands-on banking. It says bank requirements may vary, so ask your local bank what they require. And Ms. Jane brought up a really good point, because the bank, Wells Fargo at least, and I'm pretty sure other banks, they have to follow what's called a customer identification. So a customer identification program and a customer due diligence program, which is a CIP CDD. And for that, we have to have proof of not just identity, but we have to have proof of address. Okay. So that proof of address, that adult will have to bring in a utility bill that verifies their current or local address, and go from there. Okay. So thank you for that, Jane, because that's also a huge one. We'll have customers come in. My bankers will try to reach out just to kind of, confirm their appointment. They don't pick up the phone for whatever reason, and they come in, and we do need that to open the account before that gets started. Okay. So Nivea, is it? Haas, it's just what I see on my end. I don't know if it's someone else, but why do they need two forms of ID? So like I mentioned, the customer identification program that Wells Fargo has to follow is very stringent on those two forms of ID. So like for example, if someone comes in with a state ID, right? And then they come in with another ID card that the banker says, hey, you know what? Let me see if this works. Let me see if I can plug this in. The banker will open up that account with the two forms of ID, but my back office, when they regulate that account after 24 hours, they'll know that that second form of ID was not legitimate. So what will happen is the bank will give my banker 10 business days to reach out to the customer and have the customer come back in with the proper documentation. If not, that account can get closed down automatically. Okay, so it's very important that the two forms of ID are presented. That way we can satisfy proof of identity and proof of employment, proof of this for address. Actually, not proof of employment. I'm sorry, proof of address. Okay, so I hope that helps.
Is it another way of making sure that we're keeping their money safe too? Because if somebody comes in, if maybe you or your parent lost their wallet and someone found that and tried to use that information to open an account, and it's not who they say they are, then that's one way that the bank makes sure that there's no fraud going on, that this person is who they say they are. Correct? Is that right?
Very accurate. And
Okay.
I can't tell you enough, fraudsters are out there, especially, they break into mailboxes, they take people's statements, they pretend to be certain people. So here at the bank, it's highly important that we document correctly. We have little like UV machines that we can stick in IDs to make sure that someone doesn't bring in a counterfeit ID, a driver's license, in addition to the other forms of identification that my bankers go through when they bring in a new account. So you guys probably don't see all this, but the banker, I can guarantee you, has a lot going on in their mind and making sure that they open up the account right and they do it correctly for the customer, because we don't want any negative customer impacts. Okay. So yeah, so that's just for your adult or guardian. Okay. So now if we talk about what you need to bring in on that same interaction, it's a little bit different, obviously, but what you guys need to bring in is you guys all have a student ID. Please definitely bring that in when you open up that account with your parent or guardian. And also money to deposit into your account. So we already talked about your social. So bring in your social and your student card. If you guys maybe lost your student card or something like that, bring in your birth certificate or something that you have that can validate that stuff for us, okay? Because obviously you guys are minors, so the process, the CIP, CDD requirement is a little different for you guys, and my banker will obviously let you guys know, go from there, okay? So that's the only thing you'll need to open up a savings account, okay? Next, they talked about once the savings account is open, how to make that deposit, right, into that savings account. So I brought just a Wells Fargo, I don't know if you guys can see it, Wells Fargo deposit slip. Okay, so this is what you guys will use 9 times out of 10 at the bank. I highly encourage you, if you guys are new to the bank, start off with a deposit slip. Obviously, it has, bringing in, if you brought in cash, check, your subtotal, if you're going to do less cash, and then the total at the bottom. And then up here, it has, which account you're going to be putting it into, checking, savings. It has your information. It has your address. And then right below here, if you're going to be taking any money out from any of the checks you're depositing, okay? So highly important that you take a look at one of these. The teller they can give you one to take home if you want, just so you guys can practice or go from there. But I highly encourage you to get familiar with savings, not so much the withdrawal, because we don't want you guys to withdraw money from your account, right? We want you to keep it in the bank. What we do have now, especially with just everything going electronic, we have what's called an e-deposit. So if you guys do feel comfortable with having your deposits done electronically, you don't need this. We obviously want to go green. We want to save paper. If you just have your debit card or ATM card, you can just swipe that, insert, enter in your PIN, and the banker or the teller can make that deposit without using one of these. They can do it all electronically. They'll confirm it with you which account you want to go into, and you can get a printed receipt or an emailed receipt or a text receipt. Okay, so you guys do have both options. All right.
Oh, Damien?
Yeah.
Could we scan a Wells Fargo deposit slip and I could send it to Miss Rhonda and she could send it to the students just so they can look at it? Would that be helpful, Miss Rhonda?
Yeah, for sure. You know, it's very similar.
That'd be fine.
Yeah,
Okay.
it's very similar to the one that they have there, but if they want to see exactly how the Wells Fargo one is laid out, I highly encourage that for sure. Yeah. For sure. Okay. You can go on and play the next video.
If your savings account is co-signed with a parent or guardian, you can also use an ATM card to put cash or checks into your savings account. ATM stands for Automated Teller Machine. They're banking machines that do what a teller would do. It's easy, and you can use most ATMs 24 hours a day. When the bank issues an ATM card, they also give you a PIN, which means Personal Identification Number. This PIN is like a password, so don't share it with anyone. And never write the PIN on your ATM card. First, you'll need a deposit envelope. They're usually right next to the ATM, or you can find them inside the bank. Before you deposit a check, you'll need to write your signature on the back, or endorse it. Also, be sure to write down your account number with your signature. Let's say you've just received a $25 birthday check from an uncle. In real life, you'd endorse the check first and write down your account number too. For now, deposit the check into your account using the ATM. Be sure to keep your receipt. To deposit the envelope, first insert your ATM card and follow the on-screen instructions. You'll deposit the envelope in the slot labeled Deposit.
You can stop it there, Jane. Yeah, that'd be great. I do want to get to the question that we have here for Genevieve. You know, what times are we able to go and open it up? That's primarily up to you, Genevieve, based on your schedule. I would say when you have a couple of times that you and your parent or guardian are able to come to the bank, go online and schedule an appointment, or you guys can call your branch that you want to go into and ask for a banker because you want to open up an account. So what they'll do is they'll open up their Outlook, their calendar, they'll log you in, they'll jot you in, and they'll confirm a couple times that work for you. That way, in case something comes up, there's another fallback time. But you basically can let us know what time you want to come in. I would say my bankers are probably about 48 hours booked out. So if you're looking to set an appointment or come into the bank, you might want to schedule it out maybe a couple days out in advance just to kind of make sure that the banker gives adequate time to help you in your account, okay? Because that whole process can take about an hour and maybe 15 minutes. And you're like, oh my gosh, it takes that long to open an account. Well, yeah, we want to get to know how Genevieve wants to work her account, how she wants to manage it. There's other features in the account like online banking. If you wanted to take advantage of that, we would help you download the app, sign into your username and password. So there's a lot of the things that go into it. And obviously mom, dad, or guardian are going to have questions too, right? So we want to make sure we have about an hour 15 for that, okay? So hopefully that helps.
It's almost like making an appointment with your doctor, but it's an appointment with your banker to make sure you're taking care of your financial health, right?
Yeah, for sure. And I don't know about you, Jan, but I get a little like, I don't know, weary going into doctor's offices. Like, oh my God, it's so serious in here. And the doctor, and they've gone to, you know what? The bank, you could go in there and I guarantee you, if you go into my bank or any Wells Fargo, they'll treat you with kindness. If you have a question, feel free to come on in, ask, especially if you go into my branch and you let them know you're part of this program. I'll make sure I get my top guys on the job. I have one banker, Douglas, and another banker named Nelsie. They're awesome. They'll take care of most of your guys' opening needs. But it's not as serious as you guys think. I want you guys to have a relationship with your bank, because right now, if you, what are you guys, 13, 12, 13? Having that relationship now propels you when you go to college, when you get your first job, when you're looking to get a mortgage. And that's important to have that relationship with your banker or that branch manager, right? So we want to make sure that you have that available for you. And I always tell my bankers, you guys position yourselves as Genevieve's employee, because if she needs you for something, she's going to call you up and she's going to say, hey, can you help me with my balance? If something's not adding up right. And they can't do that unless they've had a relationship with you, okay? So we got Fargo 15, 14, awesome. So the threshold, and I'll give you guys some thresholds here real quick. Your parent or guardian can open up an account for you. That's called a minor account, where you do not have access to it. It's a minor account. They can make deposits, all that good stuff. You wouldn't be able to go into the account or go into your bank and withdraw that money. We have what's called a teen account, and you can get that as early as 13. So a lot of you guys are past that threshold. So that's where you're able to get your debit card, ATM card if you wanted, your mobile access, and the ability to go to the bank. Okay, some of those, the limits are obviously lower, like for your debit card. So the bank doesn't want you to go and spend $1,000 buying a TV, right? So it's capped off daily at $500 spending limit. So it monitors it that way. But at the ATM, they'll let you withdraw up to $300 or whatever the amount is for your ATM limit. Okay. So hopefully I didn't lose anybody. Okay.
No. So that is a little more fun than the doctor's visit. I agree. Sorry, that was a bad example, you guys.
If we do not have any more questions, we can go on to the next video.
So now you know how to deposit money into a savings account. Simple, right? But how do you take money out? It's pretty much the same steps as making a deposit, except you use a different bank slip. The slip is called a withdrawal slip because you're taking money out or making a withdrawal from your account. You enter your name here, the date here, and the account number here. The amount you'd like to withdraw from your account goes here. Use this line to write down the amount in words. And finally, your signature goes here, but don't sign it until a teller can watch you. Once you've signed and shown a teller your photo ID, the teller will process your withdrawal and give you the money and a receipt. If you withdraw money in an ATM, your withdrawal will usually need to be in multiples of 20, such as $20 or $40. But if you make a withdrawal using a teller, you can withdraw any dollar amount you'd like. Once again, be sure to keep your receipt.
Okay, you know what? I want to stop it here real quick, Jane, because the last slide was on ATM withdrawals and deposits, I believe. Actually, it was on deposits, and I just want to. The video is kind of old, just because if you guys noticed, it said there was a deposit kind of like envelope that you put in with your deposit. We don't have that anymore. So for you guys, when you guys are at the ATM and you guys wanted to deposit money or withdraw money, you're just going to enter in your ATM or debit card.
You want to what, Ben?
What's that? So we'll get to the question in the chat, but you definitely do not need they used to have envelopes before where you put your money in the envelope and you stick it in. You don't need that. You actually could just stick up to 30 bills at one time. Make sure they're not folded, a certain type of way. Everything's just kind of flat. You can stick it in. The machine will count it for you, and then you can confirm your deposit, okay? I just want to let you guys know that because right now you do not need any additional envelope to make that deposit, okay? All right. It says, why do you need to keep your receipts when you deposit or withdraw? So, man, you guys have some good questions. So definitely keep any receipt that you guys get from the bank. I will tell you right now, we are humans just like everyone else. We do make mistakes, especially when we're dealing with money. And what the bank does is that we have checks and balances, right? So if the teller doesn't balance at the end of the night, we can track down kind of where that was allocated and located. That receipt helps with that too. So it helps because not only does it have the teller's name at the very bottom of who helped you out, but also it has a transaction ID. So if you guys have a question and saying, hey, the teller shorted me some money, I counted this, but the receipt says this, we'll have you come into the bank, we'll pull up your receipt, and we'll go from there. There's a process that's a little bit more intricate that we'll follow, but that's one of the main reasons to keep your receipts. And another reason, and we have text receipts and ATM receipt or email receipts. It's just a good log of tracking everything, right? So you track your withdrawals, you track your savings that you're putting into the account. So it's a good way of just having that structure and having a good plan in place for the future. Okay.
And I think, Damien, the next lesson probably talks about how you can use the receipt to keep track of your money.
Perfect.
You want me to play it? Are there other questions before we do that?
So far, we've been making deposits to and withdrawals from our practice account. Have you kept track of everything we just did? Like how much cash did you get back? It may not seem obvious, but unless you keep your receipts and write down your transactions, it's hard to know exactly how much money you have in your savings account. You have to keep track of it. Plus, you want to see your money grow, right? Check this out. It's my savings account register. It's what I use to keep track of my money coming in and going out of my savings account. I even write down which transactions I did in the bank and which ones using an ATM. I keep my receipts and record them in my register right away. Now it's your turn to practice. Use this information to fill in a blank savings register. Just enter each item, then calculate the new balance. Remember, when you make a withdrawal or take money out of your savings account, you subtract. When you make a deposit or put money into your savings account, you add. Now let's try some activities. Every month, the bank sends me a statement, which is a summary of all the deposits and withdrawals on my account, as well as any interest I earned. I compare each item on the statement with my account register, just to be sure I didn't miss anything. Plus, my statement shows the interest I earned over the month. As you can see, I entered every transaction. The last withdrawal in my register will show up in next month's statement. Later in the lesson, Balancing Your Checkbook, you'll see how to make sure the bank's records and yours are the same. Balancing your checkbook helps you know exactly how much money you have in your account.
So we talked a little bit about withdrawals too, right? So I don't want to shortchange you guys on withdrawals. I also brought a withdrawal ticket, okay? So this is a withdrawal ticket that you guys will have at the bank when you guys go. As you can see, it's very similar to what was shared here. It has the account number that it's going to come from, your name, address. Right here is where you'll add the written amount. So you're always going to have to write out the number, the amount that you're going to be taking out. And that has to match with the numeric amount, okay? So every time you guys do a withdrawal, you guys will be doing this. Now, remember, like I mentioned, there's an electronic way of doing a withdrawal. The tellers have that ability too. And just to save on paper, they can do it up to a certain amount just to help the customer out, fill out all this. I like this form, probably for a reason you guys might not realize, but when you work at the bank, you're very risk oriented. So like if Herbert, Angel, Genevieve, Nivea, you guys open up an account, I want to make sure your account is safe with me at my bank. So part of what I do is if you want to come withdraw money, you're obviously going to sign, right? That signature we are going to have in our database from that first day that you opened up the account. Okay, so if you're going to do a withdrawal, my tellers are going to go through and they're going to make sure that that signature matched that opening day that you came in. And guess what? If it doesn't match, There might be, hey, do you mind re-signing for me? Because we want to make sure that we have who is in front of us, right? So a lot of times we look at this form as almost kind of like a check, which I don't know, parents, adults, you guys out there, you guys notice that we do not keep any withdrawal slips anymore out in the lobby. We don't keep these out in the lobby anymore because it's a form of a check. So if someone knows your signature or knows your account and steals like your statement, they can copy this and come to the bank and just bring this to you. So I was looked at with the side eye when I took this out of the branch. I had to confirm with a couple of my team members, guys, I'm not going to be, doing any funny business with this. This is to teach the kids what a withdrawal slip looks like, because we take the risk management portion very seriously at the bank. Okay. So if you come in and you do your banking with Wells Fargo, that's just one more step that we are going to look after your money, make sure we don't give it to any random stranger, because there's other steps that we follow to make sure that we keep your money safe, okay? So this is the withdrawal ticket. Unfortunately, we can't scan this out or do anything like that, Jane or Rhonda, but if you guys have any questions, please let me know, okay?
And Damien, I will send Rhonda the practice sheets from our the hands-on banking program. I'll send that to Miss Rhonda and she can send it out to you all, and you guys can practice on that, the examples that we have within the lesson. So
awesome. Yeah, that's great. And then we talked about your savings register, right? So when you take money out, when you put money in, we have at the bank and any bank what's called a register. So this is the register, and it looks very similar to what we have down here in the hands-on banking. And it basically just lists sections where you could do a withdrawal, a deposit, and you're going to write everything in. The reason for that receipt is to know exactly what was taken out, but also you want to match up between all your deposits and your withdrawals. You want to make sure that ending balance matches what's on your ending statement balance, because if it doesn't, you're either missing something or maybe you didn't allocate for something, and that throws off your budget. So the budget that you thought you had, if it doesn't match up, you got to go back to the drawing board and fill out. I can't tell you how many times I spent with clients hours upon hours just going through their register and finding out what didn't allocate well for them. But you'll hear that this is a little bit obsolete, like, oh, people don't use their registers anymore. I highly encourage you guys starting out to use this register to keep a good eye of your money and your savings and your withdrawals, because it could kind of slip your mind a little. You probably buy like Mr. Reifert said, some Jordans or something like that, and you didn't allocate for it correctly. You want to make sure that you have a grasp of your money. Okay. Now we do have things like online banking that you could use in addition, right, to this register. So I highly encourage you using both, but making sure that this is something that you guys are focused on when you guys are trying to create your budget and your checks and balances. Okay. Does anyone else have anything to add, or any of our facilitators, anything you guys want to? I know we're coming up on closing time here, but I want to make sure we get to a few things before we wrap up. Anything you guys have, or any other questions from the chat room?
So thinking maybe we should just go right down to checking accounts. Does that sound good?
If we can do checking accounts, and then that should tie into the checks. Writing a check, that'd be awesome. Yeah.
Another tool for keeping your money safe and easy to access is called a checking account. Checking accounts usually don't earn interest, but they give you greater access to your money. A checking account is just as easy to open as a savings account. In fact, opening a checking account will probably require the same IDs as you need for a savings account. But before you and your parent or guardian head to the bank, be sure to ask what information they require. Checking accounts are for money you spend day to day, and banks provide checks so you can use your money without using cash. When you open a checking account, your bank will probably offer you the opportunity to apply for an ATM card and/or a debit card. Both are safe, convenient ways to get cash, make deposits, and transfer funds. You may be able to use your debit card to make purchases if the merchant accepts it. Every time you make a transaction using an ATM card, debit card, or check, save the receipt you receive and record the information in your register. A check is a piece of paper that formally asks the bank to pay someone some money from your account. People use checks to pay for groceries, rent, and other bills. But be careful. Checks should only be written if you're sure you have the money in your account. If you don't have the money, the bank will charge you an expensive fee. And the company you wrote the check to might charge you another fee. Ouch! All in all, it costs a lot to write a check for money you don't have. Plus, it's against the law.
Yeah. So, okay, yeah, you go for it.
Do you want me to keep going to the next lesson or?
I think if it, you know what, I think
You
we
want
can
me-
stop it there, but if you can keep it on that screen, just so
Yeah.
we can see just kind of how the check format is. Because we went over quite a bit in this last slide that Jane just showed us. When you're opening up a checking account, it's the same exact IDs that you're going to need as you opened up a savings. And it's kind of, I don't want you guys to get confused, like it's going to be a whole another process. They actually just take your IDs and all that just one time. They fill out your profile with in our Wells Fargo database, and then they can open up a checking and a savings for you at the same time. Okay, so the process is very streamlined, but it's up to you on which account you want to have. Do you want to have a savings account? Now, I don't want to confuse you guys, but a savings account, obviously it's meant to save, right? So the bank rewards you with interest, correct? Now, before the pandemic, and this was kind of like confusing because before the pandemic, we had what's called Regulation D, and you couldn't take out money from your savings account more than 6 times in one statement cycle, okay? I don't want to confuse you because all banks stopped that because of just the pandemic and people wanted it, the banks wanted individuals to get to their savings account without charging them anything or giving them any type of like restriction. So that's no more, but I want to give you guys some background so you guys kind of have that knowledge. But savings is primarily for savings account, right? You're going to have to meet the banking requirements to get that waived every month, which at your guys' age range, you guys will. Now, a checking account is something a little different, right? A checking account is a product that doesn't earn interest most of the time. What's designed for is to make it easier to pay bills, make payments, and withdrawals or things of that nature. So when you're writing a check, that money is always coming out of your checking account. Now, there's ways of like setting up overdraft protection. If you didn't have anything in your checking account, it pulls from your savings. But for our lesson today, you cannot use your debit card or write a check if you do not have that money in your account. Okay, it's very important because it's not going to pull from your savings, even though you have probably more of your money in your savings. It's always going to pull from your checking account. Okay, so if you buy something online or you write someone a check, it's always going to pull from that particular checking account. Okay, it's very important that you guys understand that. And you guys do the checks and balances of any withdrawals or deposits from that debit card. And I want to get to that question that we asked earlier because in our lesson they talked about, the bank could charge you a fee if that check is a bad check or if that check bounces. So essentially, if you write someone, a check for, I don't know, landscaping or something like that, right? Even though you wrote that check out, it's not out of your account until they process it on their end at their institution or their bank, okay? That's where that check register comes in. So you can kind of see what's allocated for that, right? So you kind of can see, okay, I wrote that check out, even though it hasn't cleared, that's exactly what's coming, what should come out, and that's how much money I should have left over. So unless you check your online banking or you call our phone bank or you call your banker, they won't be able to tell you unless that check is cleared, okay? It's kind of important because you want to make sure that you have money in your account so you don't write that bad check, okay? I wanted to get to that because I know that was a question in the chat room earlier. Do you guys have any questions on that or any concerns or how a check works or anything like that? Yes, Jane.
So is there a certain age you have to be to open a checking account?
So at our level, at 13 is where you can actually open up your teen account, okay? So that'll come with, you know, some check registers, you know, a little copy of a check or whatnot. So I don't obviously recommend you guys start using those checks right away, but it will give you an alternative. And they might have changed that recently, Jane, with some of the products that we have out for a checking account to make sure that they don't have that until they're 18. But you guys are able to get that debit card right when you're 13, okay? And the bankers will know exactly what products to fit you in. I'll take it one step further. You guys can actually go onto wellsfargo.com and take a look at that account that's qualified for your account at your age range, okay? I believe it's a clear access account, which they've done away with checks just to make it a little easier and safer for individuals. But before it was a teen account. So, yeah.
Oh, so really, Damien, the checking account is probably something that people will use as they get older. Like when you get your first car or when you start going off to college and you have to pay rent and food and gas. So right now, at being in middle school, a savings account would be a good way to keep your money safe, earn some interest, and you can still take money out. But you can have both checking and savings, but usually most people want a checking account when they get older, when you graduate from high school, and you have more expenses on a regular basis that you have to pay for, right?
Absolutely. Yeah, no, definitely. And like I said, I think Wells Fargo also, you know, sees how important financial literacy is too. So if you go onto wellsfargo.com, you'll be able to see what products and services are there for you. And like Jane said, a savings account is ideal only because you get that foundation of savings. Now, when you do open that account, you can also get an ATM card. It doesn't have a Visa logo on it. So, you know, you won't be able to make purchases or anything like that just out of a savings account, but you can access it at the ATM, or if you come into the bank, you can insert your card, will have your name on it, all that good stuff, and get you on the right track until you are comfortable and, you know, willing to open up that checking account. Yeah, for sure.
Perfect. And I just wanted to point out, I know that everybody did this lesson already, but this is the parts of a check. This is a good lesson to go back to. If you just hover over the different buttons, they'll tell you what each button is. I'm looking at the time. We've got about 8 minutes. Do we want to go through any of the other lessons, or should we just see what other questions people have? Maybe Mr. Rayford or Mr. Richards have some comments they want to make.
Yeah, I'd like to talk to the young people for about 3 or 4 minutes. So if you guys could wrap it up, it'd be great.
Yeah, I'm good. I think that's a great idea, Jane. We'll turn it over to the panel and see if they have anything else they want to add and go from there. Thank you, guys.
You done?
Yeah, I mean,
All you, Mr. Rayford.
yeah.
Oh, wow. I didn't mean to rush you off.
No, we learned a lot today,
It was a
and
lot.
I will send some practice documents to Miss Rhonda so she can send to you all. Practice on those, and if you have questions, bring them back next week. And or you could always you know, email Miss Rhonda and she can have those questions given to us and we can bring the answers back next week.
And
But sorry, go ahead.
No, I was gonna say, Jane and Miss Rhonda, if any of the kids or anything, because I'm just a big proponent in just handling just business, especially for these young kids. They can reach out to me. You have my email address or my phone number through one of my bank signatures, or if any of them want to reach out to me, I'll get you the info. That way they can call me up directly, or I can get them in front of a banker, okay? Because I know how important that is for them. And with that, I'll turn it over to Mr. Rayford.
Wonderful, wonderful. You guys can stay on the line. You don't have to say goodbye.
Yeah, please stay on the line because I need to take attendance. Please do not leave. And I have some messages for some of the students.
I'm talking about Jane and Damien. They can stay on the line.
Yeah, we're on.
Kids, I need for you to stay on the line. Thank you, Jane. Thank you, Damien. That was a lot of information. If you kids could come back online so I can see your beautiful faces, I would greatly appreciate it. Come on back online. So
Everybody turn on your videos, please.
So I can see your faces. And this little ending is really a dialogue because I would like your feedback. So if you could turn your videos on, I would appreciate it. That was a lot of information, yes or no? You got to nod up and down, but I don't hear anybody. One of the things I wanted to ask you is, we're talking about money. What does money mean to you? Turn your mics on. Turn the mics on.
Everybody, please turn your videos on. Everyone, please turn your cameras on.
I cannot hear you, Angel. You talking to me, Angel? Oh, okay. All right. So tell me why we have money. Because we're going into checking accounts and we're going into savings. Why do we have money? You don't need to raise your hand, Angel. Just blurt it out.
So we could balance everything?
Yes. What were you about to say, Angel?
So we can like buy things that we need.
Correct. So both answers are correct. But let me just give you, like I said, sometimes a story can help us anchor on the information. This is my rendition of money. Once upon a time, we didn't have any money. We did trade with our items. Case in point, if I was a pig farmer and somebody else was a cow farmer, we would trade the cow or X amount of pigs for a cow. We would trade X amount of cows for maybe a horse. However, those items are very difficult to put in your pocket. Yes or no? Yes or no? So money was developed because it's an easy source to exchange and purchase items. You could put $500 in your pocket versus a pig. You can't put a pig in your pocket. So money came about to simplify exchange. One of the things that Mr. Damien talked about, we talked about fees. But one of the things I want you guys to understand is banks are a business. Banks are a business. So when they say this fee or we're charging you this and so forth and so on, it's a business. Case in point, I have a lemonade stand and Angel has a lemonade stand. We both have a business, yes or no? I'm selling yellow lemonade, but Angel's selling pink lemonade with a peppermint stick. And she's getting all the business. However, Angel's cost for her lemonade is 30 cents and mine is 25 cents because Angel is covering the cost of that peppermint. Does that make sense to everybody? So understand that. And one of the things Mr. Damien talked about, well, and somebody asked this question, why do I pay a penalty? Why do I pay a penalty on my own money? That's a good question. And again, I'm gonna tell you a story. And this is why I asked you to talk to your parents. This is why I asked you to have a dialogue with your friends. My son was about, I don't know, 16 years old at the time. And he had a girlfriend about 4 miles from the house. When he was 15, we gave him a debit card to teach him about money, right? In order to earn that money, he had to do chores around the house and keep good grades. That's about it. He went out, right? And he bought a burrito on his way to his girlfriend's house. A burrito. How much is a burrito? $5? But he overdrew on his checking account and it was a $20 penalty. Oh, my wife is listening to this story. She remembers better than me. It was $37.50. So the burrito cost $5. The penalty was $37.50. And my wife said, now you've got to do these chores without getting paid because you owe us $37.50. And at the end of that conversation, she said, I hope that was a delicious burrito because that burrito cost $42. So I just want you to understand that these are businesses. They charge to stay in business. And I want you to understand, avoid penalties. This was a great, great session today. You guys are great for taking your Saturdays out. Mr. Hines, do you have anything to say?
Good afternoon. And once again, my rendition of money is very similar to Darryl. It's a medium of exchange. A medium of exchange no longer we're trading cows and sheep, but it's a medium of how we interact with each other. This is so important, these habits. This is another tool in your toolbox. When I was younger, I worked for the drugstore and I made $20 a week for sweeping up and cleaning the drugstore. No one gave us the opportunity to put money in the bank, so I kept it in my suit pocket. As I became older, I realized how important it was to have that money somewhere else because one of my family members stole my money. And no one was able to tell me who took it. But had it been in the bank, in a safe place, had it been in a place where I had control over it. So we're talking about control. We're talking about habits. So you have no idea in setting up your life, these habits, financial responsibility, putting tools in your toolbox that you're going to need out throughout this life, and paying attention to detail on these wonderful, wonderful opportunities that you have. So just keep coming. The information is very, very, very important. And thank you guys for showing up. And remember, always put tools in your toolbox and conclude with great habits. Habits, habits, habits. So how you do one thing is how you do everything. Okay? So have a great Saturday.
Thank you, Mr.
Enjoy
Hines.
the Super Bowl.
Mr. Richards, do you have anything to say?
Thanks, Brother Darryl. Everyone on the screen, everyone that's attended today, know and understand and make up in your mind now that you're going to be successful in the future. And being successful, you're going to also earn a lot of money. You don't want to get to the point in life where you're earning money and you don't know what to do with it. You'll as you get older, you'll see examples of football players or basketball players or this person or that person or someone that wins the lottery. And within 5 years of them winning the money, or within 5 years of them leaving that football career, they're broke. You cannot and will not be that person. Okay, because one, what you're doing today, you're making sure you're not putting the cart before the horse. You're understanding and you're learning a good base. And you're understanding that just because it's not something that's going to blow your mind and turn into $1 million by tomorrow, you understand that it takes time and effort and being consistent with your money. That's how you're really going to maintain your wealth as you get it. So thank you all again for coming today, taking your time out. And remember, what you learned here today, talk about that with your parents. I did the same thing for my parents. And that's why I'm so happy when I got into this particular type of business. They're retired and their home is paid off. They're good to go. All right. But if I wasn't within this business, they would never known. And the unfortunate thing is that not knowing isn't an excuse. You're not going to get anything because you didn't know. You're only going to lose if you didn't know. So make sure you're paying attention, talk with your friends, talk with your parents, and teach them some of these things that you learned today. All right. And thank you.
Thank you, Mr. Richard. Is Amos here, Rhonda?
No, he's not.
I was proud of him for dialing in from Africa last week. That was big time. Rhonda, do you have anything to conclude us with?
Yes, thank you all for joining. We will see you next week at 10 o'clock. Keep an eye out for an email from me for the lesson for the following week, but I need the following 3 students to stay on. I need Brooklyn Maddox to stay on, Osaradan Ubabo to stay on, and Tristan Sinestis. Everyone else, have a fantastic Saturday. We'll see you next week.
Have a good Saturday, everybody, and thank you for showing up.
You too. Have a good